Here we have the 4-hour price chart for NIO Incorporated, stock ticker NIO. Here we can see that the stock has found its footing here a bit and is starting to trade higher. We've currently posted near-term highs coming in at 488. So it does look like we're closing in on this important $5 mark here relatively soon. We're seeing a bit of a slowdown in trading activity today. We could see things pick up into the end of the session. That's always possible. But it's not clear if we will actually be able to test this $5 level today. This might have to wait until Monday. However, currently, what's encouraging about this stock activity, as we can see here, is that not only are we posting a green session here, but we're also breaking prior highs, which came in at the 480 mark, and we're on the verge here of breaking this shorter term downtrend line here. We can draw an arrow here to show this. But this downtrend line here is on the verge of breaking. It's not going to be able to hold up much longer, um, without breaking to the top side. I mean, even if we were to just kind of trade in a sideways consolidation pattern, this would kind of force the trend line itself to break. So, the outlook here does remain favorable for this type of outcome here on a shorter term basis because, we are rising above the exponential moving average cluster at this point. It also appears as though the 20 period exponential moving average is ready to cross above the 50 period exponential moving average. That would be the yellow line and the orange line here. Yellow is 20, orange is 50. So if we did see an upside cross here, this would be a bullish signal, and it would give us more reason to suggest that bullish momentum is starting to build for this stock. As we can see here, the share price itself has actually fared up quite well, during recent trading sessions, and that's a bit of a surprise, overall because there have been many stocks in the market, particularly technology stocks, that have come under a strong amount of selling pressure over the last few days. Meta Platforms broke major support levels. Tesla has had major declines. Apple saw some very substantial declines in recent sessions. Nvidia as well. So there has been some broad based selling here throughout the market, which is an event that would be expected to weigh heavily on stocks like NIO. But as we can see, this has not happened here. We are starting to develop a shorter term uptrend activity here. But first we would need to see this ultimate downtrend line break. This would be the downtrend that really began. This would be toward the middle of May. Sorry, roughly May 15, with highs just above $6 per share. And this was a significant decline here. As we can see, the candle itself is quite large. It's kind of an ominous, dangerous looking candle here. But then we also have the fact that this resistance level formed right at a prior resistance level at roughly 604. So what this created here was a double top formation pattern here. And ultimately, this is what kind of resulted in this upcoming downtrend. We have to remember, though, this is on a shorter term basis. The longer term view here does remain sort of sideways consolidative at these lower levels because we have formed a bit of a trading range here between 605 to the top side and roughly 360 to the bottom of the trend of the trading range. As we can see here, there are some positive signals that have developed, even as the market as a whole is showing some fairly significant declines. So that's important because it is showing that buyers are moving into this stock specifically, and they're not really investing in sectors like, say, the electric car sector or just the technology sector as a whole. It does show that people are starting to focus on this stock in particular, and this could suggest that we're starting to reach a bottom here. I mean, this really is the main question here: are we forming a bottom or not? You can make arguments in every direction, but in my view, the balance of the evidence here does support a base that's being formed. And this is important because we've seen some very significant declines here in this stock over the last year and a half. So, currently what we do need to see here is a series of higher lows. For many people, many people want to see higher highs because that, it's ultimately what factors in when possible profits are generated and things like that. But in my view, that's not the way that I view these types of situations. If you're dealing with a major downturn here, major declines, what I would prefer to see, like if I could choose between higher highs and higher lows, I would actually choose higher lows because it would suggest that a bottom is forming, and it would suggest that any rallies from here would be more sustainable. I mean, that's really what you're looking for here if you want to see massive moves to the top side. It's always possible that you could get a bit of a spike to the top side, but what we really want to see here is the development of a sustainable trend. And that really requires higher lows more than it requires higher highs. Higher highs can be fleeting. They can last a short period of time, a very short period of time. You should take a look at my video on Chewy if you would like to see an example of a stock that's just like really spiked higher quickly and then just immediately collapsed. All those share prices just immediately collapsed. So, in these types of situations, what I would really like to see is a base forming and a series of higher lows. Currently, we are seeing that. We're seeing this initial low back here. This would be the middle of June, second half of June, roughly April, second half of April, I should say, where the price lows came in at 360, and then this was followed by this following price low, which was the second half of June, which came in at roughly 414. So, we are seeing some upward trend trajectory here. And this is encouraging, but the next step of this process would be, to break this downtrend line that has developed. We're on the verge of doing that. And then, after all of this happens, we can start to focus on this 200 period exponential moving average as possible resistance, and then ultimately breaking toward new highs and breaking out of this sideways trading range. So, if that were to occur, I would be ready to start saying that a major long-term bottom is in place. The stock does not have very much further to fall to the downside. Risk to reward ratios absolutely favor long positions at this point. There really is not much further to fall for the stock. And the potential for upside here is potentially massive. There's a lot of potential upside here versus relatively small possible movements, potential movements to the downside. So here's the current market analysis for NIO Incorporated, stock ticker NIO.